This is a quick video because a lot of you requested it. And the question is should you buy Bitcoin? Of course, you should be buying Bitcoin all the time. Okay, it's going down at this moment. People think that we're entering a Bitcoin bear market. That's not the point. The point is that Bitcoin, at this point, if you don't see how Bitcoin is like the best investment right now to be in, then you're living in another world. Since its inception, it's been given an average return of about 40%. So the whole thing is that should you buy Bitcoin? Is it gonna go down more? That doesn't really matter. If Bitcoin hits $100,000, which I believe might be its bottom, right? Buy more. If it keeps on going down, buy more. And don't worry about it. Again, Bitcoin has already over 15 years in the game. We have a strategic reserve. Bitcoin is actually a hedge against inflation as well. And as you can see, inflation is not coming down anytime soon. All inflation does is it goes up, it comes down for some time, but it continues to go up over time. So the best thing you can do is to buy Bitcoin. And don't DCA. What you want to do is, instead of a DCA, you want to round over to the nearest 10th or 100, whatever you can afford, right? So if you have, let's say $500, $550 of Bitcoin, maybe you want to round that up to 560, 570, or even 600. That's how you want to do it. And that goes for stocks as well. Because a lot of guys, when if things are looking bearish, they want a dollar cost average. That's the worst thing you can do. You DCA up, and you want to round to your nearest 100 coming down, right? This way you feel less of the pain, and you're still invested, right? So the whole thing here is continue to buy. Don't be afraid. Warren Buffett's best advice is buy when others are fearful. Be greedy when others are fearful, and fearful when others are greedy. Right now, people are fearful, people are selling. This is time to buy. Also, we already know that, Jerome Powell is willing to cut down those interest rates next month. So when that happens, to the moon, right? Because no one is going to be holding cash when interest rates are coming down. They're getting less money for that money sitting in cash, in bank accounts, etc. So what happens is that they take that money out of that, pile of cash, and they start dispersing in investments that they know will do well in high inflation environments, low interest rates. So then again, right? This is basically most of the video. Remember, always like to comment, subscribe. If you have any questions, comment below. Hit me in my email. I'm going to leave that in the description. And you already know. Peace out.